What is up, everybody? Let me just move some windows around here. I heard my thumbnails needed work. So yeah, been working on those. Hope you like it. It's original content, by the way. Oh, I'm playing my own video. Oh, is it delay there? Okay. All right, so let's get started. Hope everyone's week is going well. We got a lot of stuff happening in the markets. I'm seeing a lot of stocks moving on their own, so maybe that's a good sign. Microsoft's up. Look at that. Microsoft's up 0.5%. Nintendo's up. Big news out of Japan. They're becoming more accommodating to the yen, so that's nice. We got some European oil and gas companies doing well. So yeah, very interesting things going on in the markets today. But I thought since markets have been just moving down, seems like nonstop, maybe it'd be a good time to scream some value plays. So here I got my watch list. This is my main method of screening for value plays. By the way, I'll get up this video going over my spreadsheets. I'll get that up within the next couple of days, I swear. But if you haven't already, go ahead and check out the videos I posted on my value investing style, and check out the intro, maybe the disclaimer while you're at it, and you'll learn a bit more about how I approach value plays, and also the video I posted about screening for stocks and a lot of the sources I use. I posted a ton of sources in that video, so go ahead and check that one out too, in case you're looking for some more tools to kind of help you look for your own value plays, make your own investment decisions, which is the whole point. So let's get started with the old watch list. I did mention Earthstone Energy, Stellantis. So a few I mentioned over the last stream. Nintendo's looking decent, and then Visa as maybe that's just a good retirement stock, more so a retirement stock than a just this decent big value play. Nothing like that. But yeah, let's see what we can find out. I thought I might take a look at some insider trading and go straight to openinsider.com, because I think there have been a good amount of insider buying, specifically executives, not just board of directors or directors on the board. So why don't we take a look at that? I like to go to CEO, CFO purchases, and let's just see what we find. So Opco, I'm familiar with them. I don't know if I want to touch healthcare or let's say pharmaceuticals, biotech. Those can get a little weird. That one's that one's on a nasty downtrend. But that's not even that big. Let's raise this minimum here. Let's raise it to $200,000. Okay. Now let's see what we got. So if you haven't checked out the screening and sources video I posted, one thing I mentioned there is that I like to avoid stocks that just IPO'd or just de-SPAC'd. It's just not enough information. So let's look at some stocks that have been around for a while. Maybe they're hitting 52-week lows, something like that. And yeah, maybe we'll find some decent buying. Here's a big one. So this is almost $24 million in insider transactions. Medpace, so they're either pharmaceuticals or medical devices, I'm guessing. These other transactions are pretty big, but I like to look at the big obvious ones first and just kind of work my way down from there. There they are again, 19 million. So let's have a look. Let's see. I think a lot of these. Okay, so we get duplicates, but there's still. Man, that's a lot of buying. Unless this is inaccurate. What is Medpace? You'll see I have HP up here just because I'm still curious. Let's see what Medpace is. What do you do? Diagnostics and research. Clinical research-based drug and medical device development services. So there you have it. Medical devices. I'm always a skeptic of those companies. I'm sure it's not hard to figure out why. Let's take a look at their financials real quick. Let's do it quick and dirty so we can try to look through a good number of potential deep value plays rather than just focus on one the whole stream. All right, so estimates. Okay, doesn't look terrible. They have an actual business. That's good. Free cash flow. All right, nothing alarming so far. Estimates showing $242 million free cash flow through 2023. Okay. That'll be down a bit, but that's fine. That looks okay. So $242 million free cash flow. And then I always like to compare that to enterprise value. Okay, so that's a little less than 5%. So not bad, not great. I mean, for a real potential deep value play, I would think free cash flow could be a lot higher, but that's not necessarily the case. Sometimes these deep value plays are just trading at an extreme discount, cash flow not even being considered. So let's see what we got here. Stock-based compensation, I always like to look at that. $18 million compared to $1.286 billion. Okay, that's fine. They're not just trying to cash out of the company by issuing them shares and using the company's cash to repurchase those shares. They just picked up a good amount of debt, looks like. Let's take a look at the balance sheet. So I always look at the balance sheet and the statement of cash flow first. Kind of tell you the health of the company by looking at the balance sheet, and then cash flow is just telling you how much actual cash are they making. No gap, that you'll see on the income statement. Okay. So a lot of unearned revenue. I've seen that in other medical device companies. So maybe that's not too alarming, but the current liabilities are really, really high compared to the current assets. So basically, I like to look at current ratio, net working capital. And overall, you just want to know that their current assets, they have a higher dollar value of current assets than current liabilities. That says that a company is liquid. Not that if it's lower than current liabilities, that means the company is doomed, but it is an easy box to check if current assets are higher. But it's not the case with this stock. They're buying back shares. Now that's interesting. Okay, so we had 36 million shares outstanding over the past 2 years. Now we have 31. Issuance in common stock, repurchase of common stock, $807 million repurchased, and then a ton of insider buying. So, again, I'm pretty skeptical of medical device companies, just in general. Let's see if we got a different description here from ticker.com. Suite service supporting clinical development process from phase 1 to phase 4 in various therapeutic areas. Company provides clinical development services to the pharmaceutical, biotech, and medical device industry. Okay, so it's not just medical devices. Sounds like project man. Okay, this is a bunch of random stuff, I guess, that, to be perfectly honest, I'm not really going to dig into this description. Let's see. What's the valuation? Okay, there's that free cash flow yield. Okay, nothing looks like it's steep discount here so far in terms of financials, valuation. So really, we're just kind of going off of they're buying back a lot of shares, and they're buying a lot of shares themselves. They don't have a dividend, which is fine. What's the price to book? 17 times. Let's get another opinion on price to book. Medpace. Price to book 17 times. Okay. So nothing crazy there. Let's look at the chart here. Take that out of there. Okay. Kind of a nasty chart. This is just over a year. You know what? I like tickers. Colors better. Get some dark mode here. So a high of 228. And now they're trading at 150, about 155. Recent low, about 130. And it held that. It's been steadily coming up since then. It did drop, but so did the rest of the markets during August. Another thing I would check is to see if these executives, it looks like it's just a CEO that's just purchasing a bunch of shares. Why don't we look this person up? August Choendel. You buying anything else, August? There's a lot of selling. Okay, so a ton of selling before, and suddenly a ton of buying. Let's see, August Troendel. Am I spelling that right? You got it, Google. Thank you for spying on me to know what I am going to type. Let's see. Medpace. Okay, tell me more. CEO, also president of Medpace, former assistant director for the and Novartis. Okay, so this guy came from Novartis. Oh, but that was a while back. They founded the company in 1992. Okay, so this company's been around for a long time. And this guy worked at Novartis. Or I guess maybe for Novartis. Maybe Novartis acquired this company. Sandoz, whatever. Dr. Trundle worked as a medical review officer, division of metabolic endocrine drug products at the FDA. Okay, so maybe this guy isn't. We'll say we'll rule him out of the category of a dirty scammer. How about that? I want to look at his LinkedIn. Or do I? Actually, let's see. What does Bloomberg say about him? Anything? Nothing. Net worth? Okay. So typically I'm not doing this much digging on one executive. So yeah, we'll move on from him. This is interesting. I don't know why he was just selling nonstop up until, well, I guess it's been a while, January, and then he did wait for a drop. But I assume this guy's like a billionaire, so I'm making a lot of assumptions here because I'm just trying to rule out why this would be, say it would be a bad idea to maybe follow this guy into a trade. But maybe we'll put it on the list. I really don't know anything about this company. I wish I did because that's a ton of buying this guy's been doing, and he's been around for a while. Let's see, how far back can we go? Filing date. Okay, let's check 4 years. Okay. How strange. Maybe we'll just put this one on the list. That's so much buying. I mean, if the stock price had crashed, I mean, it's down, but if it had just crashed, we're talking like a COVID crash. Let's see, COVID, it was hovering around 100, went down to, that's a similar drop. But I mean, it's still way higher. This one's curious. Let's just say the financials don't make me, financials don't have me chomping at the bits to get a piece of this stock, but it is curious. But let's move on. I think this one's interesting, but let's see if we can find any more interesting ones. Maybe some cluster buys. Maybe it's not just the CEO, because maybe this guy just has a ton of money, right? And that's always difficult to tell just by looking here, right? Okay, so what else we got? Let's raise this back up to 200. Let's see. Let's go Reading Rainbow. That's right. Reading Rainbow. Some of these I've looked at before, like Rocket. I think Rocket's just okay. So I'm just gonna say insider transactions are not always a good indicator. And I'm still gonna want to take a look at the financials. So this is Rocket companies, and they're just loading up. I'm just gonna be biased and I'm not gonna look at Rocket. So let's see what else we can find. PED. Let's check out that one. Okay, just the CEO, about $470,000 in shares being traded. How big is PED? Oh, let's look at the price chart. Whoa. What's going on here? Oh, this is oil and gas, isn't it? I think I recognize that in the name. Okay, yeah. Oil and gas, focus on acquisition, development, production of oil and natural gas assets in the U.S. Company held 33,000 net Permian Basin acres in New Mexico, Denver, Colorado. Okay. So what's going on with this stock? Oh, we don't have anything. Did this company just start making money? Let's see. Oh, this is a pure penny stock. I just now saw the dollar. It's trading at $1. What is the market cap? I missed that. 86 million. Oh man. Hey, sometimes that's where the deep value is, right? But let's see what we got here. Okay. Not making any money, nothing close to making profits. Well, let's look at cash flow. It did have some cash from operations, a lot of CapEx. What is going on with this stock? Stock-based compensation, 2.28 million. Okay, that's whatever, I guess. Wow, you can't really make any judgment calls just by looking at the financials. This company barely existed before this year. Speaking of which, how long have they been around? They've been around since 2012. Stock price. Okay, so they definitely did a reverse split. Stock price high of 150, now trading at $1. Holy crow. Okay. This one's weird. What's the price of book? Let's check that. 0.89. Tangible book value 0.89. So I'm going to assume this is a oil and gas company that just wasn't making money for a long time. Maybe they're going to make a lot of money now, but let's see. So good amount of buying. There was some selling though from a director. I guess it's not much. See, these I'm kind of torn on. It's still just the CEO. This isn't really enough to go off, if I'm gonna be honest. I mean, we could do a deeper dive, I guess. Pedevco. Well positioned to deliver profitable growth. Well, I hope so. Low risk inventory of growth opportunities. Any news? Yeah, I have your results. Permian Basin, DJ Basin, that's in Colorado. I'm not sure about this one. It is interesting that it keeps bouncing off a dollar, it looks like. Yeah, every time it hits a dollar. What is this volume spike? Probably earnings. Those are getting lighter. Not just the spikes, but the volume as well. And I assume we have earnings coming up, unless we just had them. This one's a little weird. It seems a little bit too much like a trade. I don't know if it's selling at a deep discount. So why don't we move on? I think we should move on. All right. Hey, Luce, do you think this compares with J&J, Johnson & Johnson? Are you talking about Medpace? Oh, probably no comparison. Or maybe a very, very small comparison just because they're in healthcare. Yeah. Probably two very different companies. And I think they're pretty small, I think, right? Medpace. What was the market cap? Okay, yeah, they're way smaller than Johnson & Johnson. 4.8 billion. Yeah. Yeah. That one, I don't know. I'm really not too sure of. But let's not stop there because so far it's just two stocks I just don't know about. Let's see. Luminar. That company's been having a hard time, I think, at least by looking at the stock price. Digital Realty Trust. Let's see. Let's look at the big transactions. That's Medpace again. Laser, Fastenal, Opco's there. Is this still 200K? Yeah, 200K. Maybe we should open this up. I did mention I like seeing more than just CEOs, CFOs. PVH, 1 million. Let's see if they got anything. Okay. So PVH it's actually a stock that I put on my watch list some time ago. I just wasn't too sure about them because they're retail. I think they have the Calvin Klein brands, the Van Heusen. I'm sure I'm not saying that correctly. But yeah, I think they were trading at a discount to book value. And it looks like we have a little bit of insider buying. CFO, CEO Europe. Okay. And that's fairly recent. It's about 2 weeks ago, it looks like. Let's check the stock price. See if it's done anything. And I know this is retail, so retail's kind of buyer beware right now in terms of stocks. Okay, so let's look at estimates. I think a lot of retail is expected to not grow this year. Next year, they're expecting 3%. Probably just due to inflation. It's probably not even real growth. EBITDA, maybe costs are better next year, or they should be. Free cash flow, negative this year is expected, and then positive. Only 4 estimates for that. So not a lot to go off of for free cash flow, but EBITDA and revenue have 15, 18 estimates, respectively. Okay, so about 669, 670 free cash flow. Okay, so they're trading at like, what is that, 11.5% free cash flow yield compared to enterprise value. They do have a lot of debt. Let's check that out. 3.7 billion down here, and EBITDA is 1.16 billion. Okay, so a little over 3 times debt. Estimates. Okay, EBITDA is supposed to go down a bit. Okay, so that's a little high. I consider anything above 3 times to be high. However, for deep value companies or potential deep value companies, you're going to come across a lot of companies that have pretty high debt. So really, it just comes down to the balance sheet and are they going to be able to service that debt? They're going to be able to make some cash flow. Are they going to be able to survive whatever economy we have over the next year or two, whatever? Sometimes that's all it takes. It just takes a company surviving through, distressed markets. Current assets about 3.6 billion, liabilities 2.6. All right, something that is actually we can actually check the box fairly quickly looking at their balance sheet, or at least the first check box. Capital leases. Okay, so it looks like about a third of that debt would be capital lease obligations. Hopefully, not all of those are ironclad. Hopefully, they can just kind of opt out of those. You maybe have heard of something similar if you looked into GameStop a while back. They had some capital lease obligations that they could essentially just let fall off the balance sheet, which worked with their strategy because they were closing down some stores, or at least that was the plan. So, I don't know. Maybe PVH has something similar. Shares outstanding. They're buying back shares over the past 2 years, 2.5 years. Let's see. Sale of intangible assets. Okay. CapEx. CapEx isn't too bad. As we saw earlier, free cash flow is going down this year. Repurchase of common stock. 587 million, 361 million, 117. They like to buy back their stock while paying a dividend. What is their dividend? Let's see. 0.3%, maybe just to keep away short sellers. Okay, so that's negligible. But they are trading at a decent discount, 0.66 book value per share. Okay, so let's see. Maybe we could see what they tend to trade at. Price to book value. So they've traded as high as 2.2 over the past 5 years. That went down to 0.56 through COVID. And now it's at 0.66. Are they doing better or worse? Let's see. So they're actually doing a bit worse than COVID. Operating margins are slightly better. What's EBITDA? Slightly better. Okay, so operating margins are better. Free cash flow is down. Okay, so you can kind of compare this to COVID. Or actually, that was the fiscal year ended February 2020. So the COVID year was a bad year. But going back to their trading range, price to book value 0.66, and there's that 0.56 right there. This is trading pretty low. And they're buying some shares. If we had this crazy crash that we had during COVID, maybe that would be a really good indicator. Hit a low of, what was that, 34, about 34 from 105. And then it hit a high of about 120, close to 122, and now it's at 51. I'm not that bullish on retail, I'm not going to lie. And let's just say I'm going to put this one on my watch list. This one I'm pretty curious about. I mean, if that book value went down to its COVID level, that would be something. maybe that would require a market crash. But looking at the stock price, I mentioned I look at long-term technicals, mainly, end of day closing prices, the daily chart. And this chart doesn't look too good. I guess it's holding up somewhat. It hasn't traded below 50 yet, but maybe it's just falling like the retail sector. Let's see. Will it show me XRT? Yes. Okay, so what's the XRT doing? This is a retail ETF. Looks like it's just following XRT. So maybe this is one where we just wait for the price to really drop. And maybe just load up on shares. What did they do through COVID? Let's see. So it went down to, I see 29. Okay, so that's a pretty good. Wow, that's a hell of a drop. Okay. So 29, and then it went just right the hell back up. And this was through COVID, where they were still kind of having a bad year. So this one was definitely a multi-bagger. You imagine you got in some calls there. Huh. I'm putting this one on my watch list. It's at 51 now. There's a lot of selling recently. It looks like. Let's look at the 6 month, 3 month. Must have been earnings. Okay. I'll put this one on the watch list. I think this one makes more sense to me, I suppose, and it is trading at a steeper discount than Medpace or what was the other stock? I already forgot. Whatever other stock we just looked at. Let's see. Oh, that's right. Pedivco. PED. Well, PED is just who knows if they're going to make money. But yeah, this one's actually trading at a pretty good discount. But I'd be hesitant to just load up on shares because it's retail, and economic forecast is just like retail's going to have it's going to have a bad time. It's already having a bad year. So maybe this is one where, I don't know, you just throw some money at some calls if the price really drops, So I might be looking at some leaps if it goes further. It is trading at a good discount. I think this company's been around for a long time. Let's see. Oh, yeah. 2000, at least. That's a chart here. Let's see. Oh, yeah. Okay. Is this? Yeah, this is PVH. Why does this chart look different? PVH. Is this Hang on a second. Why is that? Okay. Max. Interval. Can you do a day? Okay. Am I looking at the right stock? 2018, it was at. Really? 165, 169? Okay. All right, so this company's been around for a long time. Let's see. Founded in 1881. All right. This company's clearly survived some pretty bad markets, so I don't see why they would disappear through another downturn in the economy, if that's what we're fixing to face. Brands such as Tommy Hilfiger, Calvin Klein, Izod, Arrow, Warner's, Olga, blah, blah. Okay. Yeah, maybe this is one of those, maybe I'm putting this on my bargain list just in case markets drop. And I suppose the reason why I'm saying that specifically is because I honestly don't expect us to have a repeat of COVID. So if this is a relative low for stocks, right, I don't expect stocks to just moon from here on out, because throughout this whole period, from March 2020 to, later last year, we just had a ridiculous amount of liquidity, stimulus, quantitative easing, and that's why markets just, they just went straight up, right? Crypto, everything just went up. So I don't think that's going to happen this time around. I don't think the Fed's going to say, okay, after we just raised rates, however much, 400 basis points, whatever they're going for, they're going to say, oh, just kidding. We're going to send out, the government's going to send out a bunch of checks now, and we're going to drop rates down back to zero. So that's what happens when you have rates that are so freaking low, basically zero, and you send checks to the entire nation. So that's why I'm not necessarily like ready to just load up. Maybe I just want this at a really steep discount because I'm not going to expect this same type of price action going forward. So yeah, but I'll put it on the list. That one's interesting. It's a company that's been around for a long time. Let's see. Did we look at the valuation, or we looked at price to book? Enterprise value revenue 0.72, EV to EBITDA 6.1. So that looks like kind of the low end, yeah. 6.1. I see 5.8. So it didn't even trade that low during COVID. Okay, so this could just be a standard value play, to be honest. If you don't mind taking a dip into retail right now. Decent free cash flow. That could always go down, right? So I think a lot of reasons to be skeptical, but this one is actually a solid money-making company trading at a value. I don't know about deep value, but it's on the list for sure. So let's see what else we got. So that was PVH. All right. Let's just look at latest cluster buys. There's Medpace, B. Riley. I think they're just always buying. Comstock. Oh, that's at a high. That's another thing. If execs and board of directors, they're snatching up shares and the stock's trading at near an all-time high, I'm not really as interested. Kind of trying to take a cue from the executives. When do they think the bottom is, Paper Mills. MATV. It's a lot of buying over the past year. It's all just one director. Maybe that one director just has a ton of money. They have a big dividend. Let's check them out real quick. MATV. Oh, they do. So maybe they're just snatching up shares of the stock just so they can have this hardy dividend, 6.4%. Okay, this is a pretty small company, 1.4 billion. EBITDA 187. How much debt? Ooh, that's a lot of debt for that EBITDA. So just taking on debt to pay dividends. Dividends paid 56 million. Cash from operations 56 million. I don't know if this is a deep value play. Yeah, they're not really trading any discount, so to speak. Not the way I see it. What's the price chart look like? Oh, maybe you snatched them up below 20. I bet that dividend was getting pretty high then. Estimates. So they had a lot of growth this past year. Maybe an acquisition. Also in 2022. Or that's what's expected. How many estimates is that? Oh, just one. Yeah, I mentioned this to a few of you, and again, you got to check the estimates here. If you're relying on ticker.com for estimates, just get an idea of how much money a company's gonna make going forward. You really have to see how many estimates there are. So one estimate for revenue, free cash flow, one for EBITDA. Can't really go off of that. But if I had to guess, I mean, if I had this money, maybe I'd throw some money down in this stock too if I was an insider, because maybe I want that juicy dividend. So I don't think it's doesn't really have any traits of a deep value play. So let's see what else we got. And for those of you wondering, this is typically how it goes when you look at insider transactions, or how it should go. You shouldn't just be snatching up every single stock you see, right? Or just because the price to book is low. And I like to be pretty picky too. I'm not gonna buy 20 stocks, if I see a bunch of insider buying. But if I see if we're having a pretty good market crash, or prices are down right now, I do want to know who's buying. So yeah, some of these are pretty interesting so far. Let's see. Master Gamer, cheers, man. Good to see you. Sandridge Energy. Sandridge. Let's see. What is that? Sandridge. Let's just glance at valuation first. Wait, what is going on here? Okay. That tells me nothing. What else we got? We have a company that's struggling, it looks like. They're fracking, aren't they? I bet they're fracking. Oh no, they just have reserves. I'd have to do some digging on their estimates. Does this company not exist anymore? What's going on here? Oh, they do. Okay, the estimates are just weird. Cash flow. Okay, so another oil and gas company that's set to make a lot of money, right? Let's see. They traded as low. Oh, man. They were dirt cheap penny stock at some point. What's their market cap? They kind of still are a penny stock. 616 million. Oh, and they have no net debt. Oh, they got a lot of cash. 203 million in cash, 240 in current assets, 75 million current liabilities. So they're oil and gas. What? They just have a lot of cash. So what are they going to do with it? No debt. This is something I'd have to look into, to be honest. Yeah, this is full, like, what are the projections? Because so far it doesn't look good, right? Because they're oil and gas. Upstream, yeah. So, I mean, yeah, this is kind of a different play, I think. Who knows if this is deep value? But let's see. What is it? SD? See if they got any insider transactions. Are they U.S. based? Yeah, U.S. based. Nothing on Open Insider. Okay. Let's just find some others. SeaWorld. That's a lot of buying. Let's just have a look. That's a lot of selling too. Never mind. Okay. Let's see. When did I know that the stock market is my cup of tea, glass of wine, pint of beer, or fly high thing? And there's a picture of a leaf. I see what you did there. Long ago, when I was a boy in Bulgaria, I just found a great interest in stocks. And then some other boy in Bulgaria stole my idea for making a stock trading app. So I had to find my own way, you see. Let's see, energy transfer. Wait a second. Does that say 48 million? Oh my God. Okay, so they're buying at highs. Maybe they just think it's that damn undervalued. Kelsey Warren, you have too much money. Damn. That is so much. I mean, good job buying back here because Energy Transfer, they got a pretty good yield, don't they? %9.3%. Not bad. Let's look at the price chart. Man, this midstream, yeah? Yeah, midstream. Okay. I think I looked at Energy Transfer not long ago, and I think they look like a decent value stock. In terms of undervalued oil and gas plays, you could probably make the case. I'm going to say you could definitely make the case that this is an undervalued oil and gas stock. I don't know about deep value, but it does have a nice juicy yield at 9.3%. I suppose it just depends what your take is on oil and gas. Do you see oil and gas as a relatively safe sector to be in relative to other sectors? That is not like oil and gas is so safe to be, right? But relative to other sectors, for example, look at retail, look at real estate, right? Dark clouds on the horizon for those, right? But all things considered, with the supply issues for oil and gas, maybe there's some good price support for particularly oil. Although I don't know their product mix. Is it mostly, this looks like natural gas? Probably a vast majority, if I had to guess, right? Of sales is natural gas. Maybe they do have some crude oil. I only see natural gas. NGLs, natural gas. Okay. I'm a little more hesitant on the pure natural gas plays, but I would say check out Chesapeake if you're looking for good natural gas plays. And Chesapeake has a pretty bad history, but I think they're trading at a cheaper value. Let's see. Let's just bring them up real quick. May as well. So yeah, higher free cash flow yield. I don't think they have as much debt either. Dividend yield about 5%. I think it's a bit higher actually. I think they've committed to distributing a good percentage of earnings going forward. Maybe it's closer to like 8%, if I'm remembering correctly. But I actually have shares of Chesapeake. I don't know if I'd be buying now just because, natural gas is going to be volatile for sure. But yeah, I think overall natural gas, kind of a tricky play to make right now, I think. Just because of volatility. Not that I think natural gas is just going right back down to where it was, pre-COVID. But yeah, I think you got to have a strong stomach if you're looking for the pure play natural gas stocks. But, maybe that's why people like Energy Transfer, because you get that fat dividend. And let's see what their debt is. $49 billion. That sounds like a lot. EBITDA. Okay, so that's almost 5 times debt. So if that EBITDA drops, let's see, estimates. Okay, so it's expected to go up for sure. But if it drops a bit, that debt is looking really bad. What did they do during COVID? Let's look at 3-year. Okay, so they're trading about pre-COVID levels. And during COVID, they fell to 460, 450 about. Yeah, that's a hell of a drop. Not so safe, is it? At least it doesn't look like it. But that was pretty bad. I mean, COVID was a bad crash for oil and gas specifically because of the lockdowns. But so I know we're in a different environment. We're in a different market nowadays. So I don't know. I guess maybe I would see Energy Transfer. We're kind of not quite touching on deep value plays, I think. But I think if you were already in Energy Transfer and maybe you're looking for some signals, I mean, execs just keep buying. So yeah, I don't know if I would buy them at this price, all considered. What happens if natural gas prices do fall? Because they're what, at like $7.50 right now? Something like that? Let's see. Oh, lower than that. About $7.18 per million BTU. So that's what the futures are trading at. So yeah, I mean, imagine they get cut in half just because of volatility. You know, they could always spike up higher, right? But I don't think Energy Transfer is a. I don't know. Maybe they're relatively safer because of dividend, but yeah, I think if you're just looking for confirmation bias, maybe you're getting it from the executives here. But could be a good value play. Who knows? And that I guess that 10% yield, 9% yield to protect you somewhat from a crash like that, right? Assuming they can keep paying it. They have a lot of debt. I keep coming back even though I'm trying to move on. 8.7 billion cash from operations, interest. Okay. So, yeah, they have interest coverage. Okay. Interest is high, but I've definitely seen higher. All right, let's move on. Let's see. Is this a Surface laptop I'm using? No. This is my big screen. My desktop. What else we got? Liquidia Corp. Oh, that's some. Oh, that's like a pump and dumpy pharmaceutical. No, thank you. HPK. Here's some more oil and gas. I feel like we're just gonna find a ton of oil and gas. Let's have a look. 50 million. Oh, okay. So this is a. Who is this guy? John Paul, eh? I bet he's some. I mean, might just be like a hedge fund, right? Or a family office or something. Just loading up on shares. HPK. The CFO bought some. A little bit. Let's check them out real quick. Wait. The CFK? Or do I have... Or HPK. What am I making up letters? HPK. High Peak Energy. High Peak. I bet one of you likes the sound of that name. Let's see. Revenue. 1.5 billion expected 2023. Holy hell. Look at that growth. They don't even have free cash flow estimates. Probably not. Yeah, one estimate for revenue. It's like valuation. We'll look at last 12 months since we don't really have estimates. Negative free cash flow. You know what? Let's look at the profile first. Independent oil and natural gas company acquisition. Okay, so upstream oil and natural gas and NGLs. Based in Texas. Yeah, that's a pretty short description. Let's look at financials. Man, we really don't have much to go off of here. One thing I would point out for these oil and gas stocks is really any of them. Any of the small ones, any of the ones that haven't been making money for a long time, and suddenly they are. Even if oil and gas, or, maybe it's just an oil play, right? Even if oil prices hold up relatively well, say like close to $80 a barrel, some of these companies, you just don't know. I'll bring up a very good example of a stock I was actually bullish on, and management just basically forgot how to make money, which is pretty pathetic. I mean, they had assets. It's VTNR. It's Vertex Energy. They had assets. The assets were going to make good money, and then they hedged away all the gains. And it was. I mean, if you want to listen to the cringiest earnings call you've ever heard, go ahead and give their last earnings call a listen from second quarter, and just listen to the guys asking questions at the end that obviously know more than management. Yeah, it's pretty pathetic, but. Yeah, I lost a chunk of change on that stock. Luckily, I didn't have too much in it, so it didn't make me too sad. But yeah, they were trading. I think this was a potential deep value play, and management just hedged away all their gains. I just as with the people asking questions on the call, I was so confused. Just, like hands above my head, like what is going on? How did you screw this up? So, point is, just be careful of the small oil and gas plays. Maybe if I dug into management a bit more, I don't know, maybe I would have found something. Maybe would have said, oh, these guys have no idea what they're doing. Who knows? But all in all, I think that's a good reason why any of these small plays, and it was the same case for me, but any of these small plays, if you think that potentially they're deep value and they could be a multi-bagger, they go up, 2 times, 5 times, even 10 times, right? You don't need to put too much money into them to make a lot, right? So, and sometimes it just pays to wait too, you know? I know this stock was trading like crazy. Yeah. So, back it was like trading between $4 and $5, and then it just started going on a tear. Yeah, and look at that. That's a nasty drop. Trading at less than half what they were before back in beginning of August. So yeah, just be careful with these high flyers, with these stocks that look like really deep values. Try to do some digging in the management. You're not always going to find something like, oh, never mind, these guys don't even know how to spell oil and gas. Like, you're not going to. Chances are you might not find any dirt on them. Any red flags looking at management. But either way, it's always the case, I think, especially when you're looking at for potential deep value plays. You don't need to put too much money in there to make a lot. Okay, so HBK, same thing. I don't really know much about them, but yeah, I'm just gonna. I think I've had my fill of oil and gas. I'm actually loaded up on oil and gas right now. Not so much deep value plays. I think I do have some pretty undervalued plays, like VET, VNOM. Those are kind of mixed, oil and gas, but upstream and midstream. So maybe check those out. Let's see if they got VT's Canadian. Let's check Venom. Ooh. Oh, that doesn't look good for me. Oh, that was August. Okay, these are just. Oh, that's Blackstone. Oh, I don't really count that. Okay. I don't know what's going on there. Just forever selling. Okay, that's fine. But yeah, anyways. Back to the big buys. Let's see. 19 million. We love loose. Thank you. I love you too. But only on Thursdays and Sunday nights. WeWork. Yeah, nice try, buddy. WeWork. Oh, I think that company's struggling. Hub Group. Arrangement of transportation and freight cargo. Why can't any of these be in easy industries? They always have to be in the tricky ones. Let's see if we can find something. Oh, look at this one. Laboratory analytical instruments. Let's look at this one first. Okay. Lots of buying the past month and a half, maybe. CFO, CEO. Let's see what we got. QRTX. Quantarix. But that name makes them feel smart. Let's see what they do first. Life sciences company engaged in the development, marketing of digital immunoassay platforms that advance precision health for life sciences research and diagnostics in, we'll say, the world. It offers HDX instrument, a sensitive automated. Oh, of course. The sensitive automated multiplex protein detection platform. Duh. All right. Enables research. Okay. I don't know what the hell this is talking about. Let's see. Let's see what we're looking at. Well, a sea of red. At least they have sales. This is a company I don't even think I'm going to. Let's glance at financials. Why? Because why not? Look at stock-based compensation, 18 million versus 111 million. It's and they're not making any money. How often have they been doing that? 16 million, 10 million, 6 million, 16 to 110, 10 to 86. Okay, yeah, no thanks. Who bought? Let's see. The CEO. I guess if you buy $1 million and then you pay yourself back that same $1 million, like within a year, and then some, sure, you'll pick up some shares. Maybe the directors are doing it too. Yeah, screw that. I don't know anything about the company. Maybe they're a good company. I don't know. Maybe they're gonna change the world. Who the hell knows? But from the looks of it, they're not making any money, and they're just compensating themselves for not making money. At least not yet. I don't know. Maybe somebody knows something about them, but I'm going to be a little bit more picky. Okay. Let's see. NEE. What is that, Nextera? I don't know about deep value, but maybe we'll take a look at them. On another stream, perhaps. FSLR. I think I'm just kind of focusing on insider transactions, which I think we're kind of striking out so far. Looking for deep value plays. I mean, PVH looks to be like if the markets crash, maybe it's deep value, but it is trading at a good value. I would say. I'm just very cautious about getting into retail right now. And I think they do have a good presence in Europe, so that might not do too well. But yeah, maybe we'll cover them in the stream if everything checks out. Hey, look, Chesapeake. Oh, look at that. COO, CEO, COB. All right. Oh, that was oh wait, this was in June. Okay. I think I already saw that. Is that all we got? 200, let's see, latest cluster buys. More oil and gas. Let's go back to the main page. Let's see. Latest insider. Ofco. I don't want to look at Ofco. Freshworks. So this is a recent D-SPAC, it looks like. Or maybe it's just a recent IPO. What's going on here? This guy's loading up. Is he a new director? That's another thing. You might just see people, like incoming executives, just, buying up a bunch of shares to show the, support. Granted, what is this? Okay, it's duplicate. 11.5, 3.8. That's a different transaction, yeah. Okay. Percentage owned negative. What? Okay, maybe that's a typo. Whatever. I'm not going to look at that. That just looks weird. Let's see. Penny stocks. Opco. There's PED. Yeah, PED is a penny stock. Oh, no, before. That one was on my cybersecurity value list. And they announced they were getting acquired at, or they received an offer to be acquired at $24 a share. I think they were trading at something like 18. Let's see. When I mentioned them, maybe a few streams ago, a few weeks ago. Yeah, they dip below 18, about 17.30, and then they get a buyout offer at $24 a share. Yeah, them I just wasn't sure about. And in terms of cybersecurity plays, just went with Palo Alto. I made a trade on them. It's hedged, but because I'm still worried about just prices in general. But yeah, I was looking at this, taking a multiples based approach. Let's see, what were they trading at? Oh, they look really high here. Let's see, what do they have on the watch list? Let's open her up. Hold. I think I have them as the comp now. Okay, comp. There we go. So what was the deal? Okay, so they were trading. Let's put it at 18. Okay, I still had them at high valuation. I guess it was mostly EV to EBITDA. Probably had a lot of stock-based comp if I had to guess. What do I have here? Clear laggard in cybersecurity. Yeah, the stock price was dropping while the rest of cybersecurity was just taking off. So that was kind of like, I felt like the markets were trying to say something. Recent IPO, very high stock-based compensation. Okay. So I have my reasons for not going into them. So, oh well. Missed opportunity. There have been other stocks that were trading at good multiples and yeah, I got acquired. So yeah, not sure I can claim credit for that one specifically because I didn't make a play, but also because the multiples just didn't look good. So I don't know. Other people saw something that I clearly didn't. But that was just an offer, and I've seen a lot of companies turn down acquisition offers lately. So yeah. Oh well. All right. Let's see what else we got. Let's check just regular insider buys. Let's look for the big ones. Freshworks again. Third Harmonic Bio. I don't think so. Oh, okay. That's a guy just loading up from either an IPO or D-SPAC. I ignore those. Digital mining. No, thank you. It's crypto, by the way. Liberty Trip Advisor. Oh, that's only 32,000. Come on, just 32,000. Digital Bridge Group. Is that another crypto miner? Let's see. Okay, that's a lot of buying. DBRG. Let's check them out. If they are crypto, I am ending my analysis of this. Infrastructure investment firm. Digital ecosystem including cell towers, data centers, fiber. Fiber's good. Good for the body. Okay, this is weird. 53 million free cash flow going forward. How many estimates? Just 2. 7 estimates for revenue, 3 for EBITDA. So not exactly a lot of coverage from the analysts. So many new stocks. I wish that wasn't the case. Let's look at the price chart. I like to see stocks that actually have, companies that actually have a good history. Let's see, how long have they been around? Okay, 2017. Yeah, 2017. That's relatively new. How did they do through COVID? $20 down to $5. And we'll call it $5.50. Recent high of 30. Okay. What is up with this? Man, what happened in 2000? What is going on here? What is this revenue? Okay, I can't even take this stock seriously. 3. I'm just gonna stop looking at that one. That revenue, what is going on there? 2.6 billion down to 1.2 billion. That's nuts. Oh, I'm sorry. Okay, that's crazy alone. But then 1.2 billion down to 42 million in 2019. That wasn't even COVID. What the hell happened there? Unless this is getting the facts wrong. Maybe it's ticker. I don't know. DBRG. It's max. Let's look at 5-year. Whew. Yeah, stock's not having a good time. You can always look at the 10K, but I mean, I don't see anything that suggests companies trading at a deep value. I still want to see financials. You know, if management's just loading up on shares and the financials look like crap, and off the top of my head, I can't think of a reason why that would be a good buy. At that price, then I'm not buying. Knowing nowadays how much stock-based compensation there is, a lot of these companies, sure, like a CEO picks up $1 million in shares, how much is going to get paid over the next 2 years in stock-based comp? $1 million, $2 million, $5 million, so I think, I think it's probably wise to be really, really picky with any of these companies. But overall, I got to say, I'm not really finding too much. I feel like there was decent buying maybe when I checked about this time last month, I think I was seeing some over the past like 2 months, let's say. But I think it's just a lot of, I don't know, a lot of loser stocks. Like, speaking of losers, look at Asana. The CEO, Dustin Moskowitz, picked up $350 million in shares at $18 a share. And I think he now has about 52% ownership of the entire company in terms of shares outstanding. So, but this guy was buying at, look at this. He was buying, I guess he's been buying for a long time. Did he ever sell any? I don't think he ever sold any. Okay, so he bought all the way up to 100. And he bought a lot. That must be like a couple $1 billion worth. Or at least $1 billion. He bought up to 100 at $60, $70, $50. And then I guess he doubled down at $18 a share. So this is, I wouldn't take a cue from this. I think it's interesting that he now has more than half of all shares outstanding. I know Asana did issue a ton of shares maybe a couple months ago and kind of diluted him. Maybe that was the intent, right? But this guy is also filthy rich. So, I guess it's like a drop in the bucket for him, I suppose. But this is an example of, like, I don't know if this is an indicator of, like, okay, that's a ton of money, right? Like, I don't remember the last time I saw a $350 million buy on any one stock. Like, did Carvana have that much? Let's see. Okay, so we had a $408 million, potentially, $568 million from the Carvana CEO, which, holy hell, man. That's a ton of money. But he bought it $80 a share. What are they trading at now? They're trading at 27. Oh my. These guys need to post loss porn on Wall Street Bets. So this is nuts. This is why you don't just take a cue. I mean, look how massive these transactions are. So I think you understand why I'm being so picky. But I don't know. I got to say, I'm slightly disappointed. I was kind of hoping we're going to find some more interesting plays, but I just keep spotting companies that just kind of look like losers, and I don't really see any reason to be very bullish on them. Data Vega, what's going on, man? Let's see. There are a couple companies that come to mind. Okay, not that one. What about... this is one. Spock. Okay, there's been buying. So I don't know what the deal with this company is, but you know what? I'm glad I remember this one because I think this might be the most interesting one. Okay, so nothing in terms of estimates. Let's see what the company does. All right. Spock Holdings provides healthcare communication solutions throughout the world, delivers clinical information care teams, blah, blah, blah. Company offers subscriptions to one-way or two-way messaging services, ancillary services such as voicemail. Okay, kind of sound like HR. Oh yeah, that's right. I mentioned them on the screening and sources video because I wasn't actually expecting to find anything, and this one just stuck out. So here's the thing. So they have, since about a month ago, we have a good amount of buying. Was this not in the cluster buys? Let's see. Okay, there it is. It was. Okay, so almost 4 million. Let's make sure there are no duplicates. Doesn't look like there are any duplicates. Okay. So I want to say, yeah, almost 4 million over the past about month. And we have a few directors. We got the COO, the CFO, the CEO. He didn't purchase too many, just 37,000. But yeah, that's a lot of insider buying. And I looked at the company and I noticed they had a $142 million market cap. And let's see, how many shares was that? So that's a lot of shares. So let's see. Let's just do a quick rough guess how many shares here. That's got to be close to let's say 400 million shares over the past 400,000 shares over the past 2 months. How many shares do they have outstanding? How many? Let's see. Let's just do this. Shares outstanding. Let's see. Almost 20 million shares outstanding. So, man, that's a ton. That's a lot of shares that they just bought. That's a big percentage of ownership they just picked up. Short interest, according to Yahoo Finance, pretty low, 2% of total or float. Sorry. Okay. So this number probably changed at 3.72%. So yeah, okay. So not a lot of shares outstanding. Just, essentially pretty low float. So yeah, I did look into them a bit, and one thing that I thought was just the oddest thing was that their dividend is 17.4%, which is so high. Look at their stock price chart. So they have a 17.4% dividend yield. So I actually left the tab open. So I looked into that a bit. Mind you, I don't even know that much about this company to begin with, right? But I did bring this up. So I guess they divested one of their business, or they just wound down one of their segments, right? And because look at the revenue, it's just decaying over time. But that dividend yield, that's recent. I think they increased it from, okay, here you go. This is dated February 17th, 2022. Effective immediately, Spock is increasing its regular quarterly dividend by 150% from 12.5 cents per share to 31.25 cents per share, and intends to continue this dividend for the foreseeable future, resulting in an aggregate annual dividend of $1.25 per share. The board also authorized a share repurchase program of up to $10 million of the company's common stock. So, of up to, right? Doesn't mean they're going to. But if they were, 10 million of $142 million market cap, that's a lot. Now, looking at the cash flow, they don't have any cash flow. So I'm just very curious. Like, are they just funding a fat dividend for themselves? They just adopted this dividend policy, back in February. I think there have only been 3 dividend payments since then. And the thing is, they didn't just start or they didn't all just buy in February. They've been buying. So this director, the CEO, the CFO, I guess is small potatoes compared to the other guys. But CFO small too. CAO. Okay, the executives are not that big, but I guess this guy Todd Stein. Who is this Todd Stein guy? Let's see. Todd Stein. Who are you? Movie producer? Oh, that would be funny. Was it Spock? Spock Holdings. Here we go. Became a director in July 2018. Co-investment manager of Dallas-based Braeside Investments. Focusing on global small. Applying fundamental analysis, purchased undervalued securities. So this guy's a value investor. Very nice. I like the way you move, Mr. Stein. Let's see. Does he have Stein? Oh, here we go. Prior to co-founding Braeside in 2004. So this guy manages his own fund. Stein was a portfolio manager at Q Investments. During his tenure at Q Investments, Stein managed a merger arbitrage. So this guy knows his stuff. At least it sounds like. Let's see if let's check wellwisdom.com and see, what is it? Braeside. Is this it? Oh, okay. This is does this say previously? Because that one's old. Did they change their name, perhaps? Because the last filing was, did it say 2014? Oh, wait, no. They just filed in July. So why isn't it here? Well, here we can kind of guess as to what percentage Spock makes up the portfolio. So let's see. 119 million assets under management. How much did he buy? Todd Stein. Let's click him. Owns 1.7 million shares. Okay. And then this was back, or this was filed. Oh, this is 2014. I was gonna try to do some big brain calcs here. What's going on here? How come this guy? Let's see if we can. Todd Stein. Stein Rowe. I don't see you. Todd Asset Management. Just Todd. That was it, right? Yeah. Okay. I don't know why it's not popping up. Let's see. Braeside Investments LLC. Yeah. Investments. Yes. Braeside Capital. About. Okay, home. All right, there's nothing there. I guess I don't care. All right. Literally can't find anything about them. But this guy's clearly still doing his thing. Q Investments. Let's see what happened to that. So really what I'm doing right now is I'm just kind of looking to see if there are any red flags. Like maybe this Q Investments fund blew up, right? And this guy Todd Stein is just like, oh, you got a 17.4% dividend. Sure, I'll take that, right? Maybe he runs a pyramid scheme. I don't know. So, I don't want to sign in. I can't do that. Investments, right? Oh, I still got to sign in. Okay, never mind. Glassdoor. Okay, I don't want to look at that stuff. This says it's in Fort Worth. Okay, not really finding anything. Kind of going down the rabbit hole at this point. This guy, I'll assume he knows his stuff, and it seems like he's a value investor. He picked up a lot of shares, about 1.7 million shares, and that's out of 19.7 million. So I guess he's one of the institutional holders, right? So anyways, I don't think we had any decent estimates. No. Valuation, all we have is past 12 months, 0.89 times enterprise value sales, 0.91 times price to book value. So at this point, I mean, this seems like a stock, like they're just gonna, what's the debt? 19 million. There's no positive EBITDA. I mean, are they just paying themselves a fat dividend? So I guess at this point, I'm wondering, at what point does this company cease to exist? Because apparently I can get a 17.4% annualized dividend as long as this company continues to exist. So is this just a massive yield bond, you know? So I don't know. This one is very strange. I don't really understand it. Is old Todd, is he going to turn this company around, you know? There's just so many questions about this company, but it is very curious how they could finance stock buybacks. I mean, they said up to 10 million, right? And maybe that plan is over the next year, couple years, right? But they're going to pay these really high dividends. There's no preferred stock. So the way I see it is, if these guys wanted to just cash out on a company, right, and they just wanted to just basically steal from the company's coffers, you know, whether you're an executive, whatever. So many executives do that nowadays. They don't care about the stock price because they'll make their, you know, tens of millions, hundreds of millions of dollars over that crazy bull market, right? All that stock-based compensation. What do they care if the stock price drops, you know? But the stock-based compensation, let's see, 5 million compared to 138 million. I mean, why not just do it through stock-based comp? Or why not issue preferred stock? Why not do high-yield debt? Why invest in the stock and then do it through a dividend where they're going to get double taxed? So to me, this is, if you were going to try to milk the company, right? If you're going to just take some kind of control over the company and say, hey, let's just pay ourselves. The company's going to go bankrupt. We'll file for bankruptcy. We'll get a nice tax deduction, something like that. And, we'll work the system. This is like the least efficient way to do it. So this is very curious. I don't know why they're doing this. But disclaimer, I did pick up some shares. And it's a very small position because I don't know. I can't say any good reason to pick up the shares other than I don't think these guys are scammers, and there's a 17.4% dividend yield. But sometimes, like, that's it. Sometimes that's all I'm going to look for. Maybe they do turn around the company, but overall, this is purely, I picked up some shares because I want to pay attention to it. And I did not pick up a lot of shares. Maybe the market crashes. We'll see what they're doing. Maybe they pick up, these guys buy a lot more shares if the market crashes. I don't know. But, I mean, this price chart, it's not the best if you look over the past 5 years. I mean, that's a hell of a downtrend. But it did hold up at about 626. And it's been coming up since then. I think it was February. They announced that high dividend. Yeah, February 22nd, something like that, right? That was that press release. Let's see. Or February 17th. Maybe that's when they had that drop. Okay, yeah, they had the big drop. I bet short interest dropped that day for sure. So they've just been going down. Probably these must be ex-dividend dates that they're dropping here. So, or either that or just earnings, if they're different dates. But this is a small holding. I want to keep an eye on it, and sometimes I'll just buy shares, just a small amount of shares, really small position in my portfolio, just because I want to keep track of a particular company. And that keeps it in my head. If I lose, I lose. It's not that big of a deal. I don't do this a lot. I really don't. Honestly, this is the first company that I've bought shares of in a long time based on, like I don't know, a hunch, intuition, but also because 17.5% dividend yield. But yeah, I mean, this stock could drop 17.5% and not be break even over a year. So this is a very curious stock. I honestly don't know what's going on with this company. So not exactly the highest conviction play, but again, that's why it's a really small position. So I bought some shares just to put it on my radar. I actually bought at this price, $7.23. And oddly, it's just been like flat for like a week now, a couple weeks. Yeah, it's just been flat around this price. Pretty odd. What did they buy? Did the markets react to that? Oh, that was just 3 days ago. He picked up some more. Old Todd, $1.3 million worth. I'm sorry, I'm looking at the filing date. Well, I guess that's when the markets would find out, right? So September 19th. So doesn't look like anything happened those days. So yeah, and maybe the rest of the markets feel the same way. Like, you know what? We don't know what's going on here, but maybe we'll take a fat yield. I do find it interesting that the stock just started coming up, and I think at this point it's outperforming the markets, at least over the past 3 months. Let's see, 3 months. Let's go full screen here. Comparison SPY. Let's make that red, just like the trend of the markets. Yo, look at this. It's outperforming the markets. It's up 12.5% over the past 3 months. SPY is down 3%. And this doesn't include dividends. There was a dividend right there. So there was that 31.25 cents. So yeah, this is very interesting. What is that, like 4.5%, close to 4.5%? For or you got 4.5% of that 17.4% annualized. So yeah, throwing dividends, you're beating the hell out of the markets over the past 3 months. Granted, this stock is not held up well. Yeah, so if you buy back here, you're kind of sucking. Let's see, how did they do through COVID? 2020, there's COVID. Yeah, this stock does not have a good history. And I mean, the financials kind of paint that picture, right? You look at revenue. So again, I really can't say anything about the stock. I could just say that over the past 3 months, it looks to be trading a bit better. And I think, let's see, how's volume? So maybe volume's picked up a bit. You look at it overall, at least before they made that announcement. So this could just be a lot of selling on, around ex-div date and then maybe buying afterwards, right? At least there's more volume. I guess you could say that. What's average volume? Oh, yeah, that's really low volume. Average 122,000. Okay. So, yeah, this is going to remain a pretty low conviction play, but I want to have it on my radar. I want to know what this guy Todd knows. He knows something, right? What's going on here? But all right, I think that's good enough for Open Insider. Maybe we'll check out. I might do another video, just a separate one. I'm trying to make the videos a little bit shorter, at least the live streams. But I do want to check out some of these whales. I do mention the screening and sources video. I like Towel and Company for those potential deep value plays. But you know what? Let's have a look. I don't think it'll take too long. Okay, so this Towel and Company, I mentioned them in another video. Towel and Company, there they are. They are in Colorado. Deep value investing. Look at that. It's right there on the front page. So they'll show you, I think, top 10 holdings of their portfolio. They'll show you their performance. So these guys, they're doing pretty well, all things considered. I mean, the benchmark's the Russell 2000, which makes sense, and the S&P. So they definitely beat over the past year. I mean, they're still down, but hey, that's going to happen when you're in deep value, right? I think the big returns are typically made coming out of a bear market, out of a crash. So you can kind of see that over 3 years. I mean, the S&P, it's hard to compete with the S&P over the past 3 years, really. But even then, I think they still beat. Yeah, both. S&P, we had like 20+% years. So over the past 3 years, so that's pretty damn good. But yeah, 5 year, they're not beating over 5 years, but yeah, you look at the long term, 20 years, 30 years, inception. So I think overall their investors they're probably happy. But yeah, they go for this value plays. So I like tracking them. One of them that I just put on my watch list is MHO. I don't know too much about them. They are home building, so I'm pretty skeptical. But yeah, let's take a quick look at them. I don't think they had any recent insider buying. I think I checked earlier. Let's check again. Yeah, okay. So nothing recent. It just had some selling back when the price was at oh yeah, it was much higher than where it's at now. I think it's what? MHO. Yeah, so they sold at a decent price. I don't blame them for selling around 66.71. CEO sold some at 46, 47. So no big deal. No insider buying, but yeah, I did start looking at this one. I am cautious about home building, specifically home building, and if they're in residential, I'm even more cautious. Well, I guess they would be, right? It's home building, but specifically, residential, I'm very cautious right now, and the southern housing market looks to be a little hot. The housing markets down in the south are correcting more than anticipated. I know like Florida is being hit hard, and Texas. I think Austin's dropping a good amount. Dallas, I think, is starting to get hit, but I don't think it's as bad as Florida yet. So the Texas housing market's typically held up pretty well, but I think it's a very different housing market than it was, say compared to the past 10 years. So it's been running a little hot, I think. So I'm still skeptical. I'm not listening to all the retailers saying, "Oh, Texas housing is strong. There won't be a correction here." Yeah, okay. There'll be a correction in their employee count, and they'll be looking for a new job. I'm just kidding. I hope none of you are retailers or real estate realtors. Let's see. So no free cash flow. So this is basically a REIT, and I don't typically look at REITs, but one thing I do want to know is what are their assets worth? So they obviously have. I'm sure they have plenty of homes on their balance sheet. They're trading at a 0.6 price to book value. So that's pretty low. I do like when Talon Company picks up some stocks, or particularly when they're building up positions. So MHO, where did you go? There you are. Okay. So MHO, you can see right here, percentage portfolio 3.75%, and they added in second quarter. Estimated average price paid was just under 36. So they are okay. So they're slightly in the positive, it looks like. So something I'll look at specifically is did whatever fund it is, doesn't have to be Talon Company, did the fund just increase their position? Did they just enter the position? What was the price paid? One thing that's very interesting to me is if they bought at a much higher price and then they just doubled or tripled down, if they're adding big time. And this information is always going to be delayed. As you can see, the source date is from the second quarter end, right? So this information is out of date. But that's why I look at the price paid, because and if anything has like changed since they bought, right? If there was a massive change in the business, whatever, maybe it's negative, right?
maybe I don't just look at their buying and say, oh, I'm going to buy too, because there might be reason for them to have gotten out in the past quarter, or in the past 2 months, say. But yeah, MHO is interesting. Arrow, I think, is another one. I haven't looked at yet, but yeah, just simply because of that price to book value, I'd like to look at funds from operations or adjusted funds from operations. Unfortunately, ticker.com they don't just give that to you. I think you have to pay for it. And I'm not subscribed to the service, but you could just calculate that yourself. But yeah, this one's on my watch list. I am thinking it might be one of those deep value plays if the market crashes. So overall, I think I'm not really finding plays to just throw money at today. Aside from Spock, I threw just a bit of cash on that very small position. But yeah, if they're trading at that steep of a value, my question is, what's the actual value of those homes? And say we do have a correction, does the value, does this company's book value change a lot? Does it go down 40%? So that's what I'd like to know specifically. What's the spread right here? So I might look into them a bit more. But yeah, I think they're kind of interesting so far. And yeah, all things considered, maybe wait for a crash. Maybe I start dollar cost averaging. I don't know. I would have to look more into them though. So they did buy Stellantis. I think I mentioned that in another video. And I'm going in on Stellantis. I'm dollar cost averaging. If Stellantis drops another, 10, 20%, I'm going to add. And if we have a big market crash, I'm loading up on shares because that company's undervalued, trading at a pretty steep value. Arrow, I might look at them another time because I think they're like electronic components. I don't know too much about them. So, and I realized I'm kind of just like walking through the process mostly. I'm not doing deep dives into these companies, but I mean, this is part of the screening process for me, right? And if they're that undervalued, surely I can take another week to do some research, read the 10K, stuff like that. Maybe come back next week and share what I find. Maybe you guys find something yourself, right? If they're so undervalued, I doubt the stock price is gonna go up 50%, 100% in 1 week, right? So I'm not gonna get FOMO. So yeah, Aero Electronics, electronic equipment, instruments, components. So some exposure to industrials. One thing I'm going to want to check, and this is another thing I mentioned in a few of the other videos, and I'll just keep mentioning this type of stuff just in case you haven't seen those. And if you haven't, again, I encourage you to check out those other videos so you get an idea of my process in general. So I like to check operating margins over the history of the company, right? ROIC.ai is pretty good for that because I get the long-term financials. See, I'm pretty frugal. I don't like to pay for stuff, and I just learned that because of how I started off in trading, and that just kind of stuck to me. I just got very used to not having to pay for any information, and yeah, it just kind of stuck with me as my portfolio got bigger and bigger. Because I've done fairly well over the past several years, but I've had a few multi-bags as well that gave me a nice boost. Thank you, GameStop. But let's see. Okay, operating income. So look at the margins. We got 4.5% over the past year, or through 2021. 2019 was rough. Other than that, I see above 3%. So, oh, look at that. Market's closed. Very nice. So I guess that's it for buying, huh? But that's okay. Let's just go over this a few more minutes, I suppose. But yeah, over 3%. So pretty decent history of operating income. Let's see if ROIC talks about adjusted funds from operations. I don't see it. They're not going to give it to me for free, I guess. Or maybe they just don't calculate it, which is fine. Net change in cash. Yeah, I'm going to have to look at that, I guess. But this is Arrow. Sorry, I was thinking MHO. Okay, free cash flow. Okay, so they had one bad year. They had a big year in 2020 through COVID, so that was nice for them. What about shares outstanding? Let's go back to, let's see if they've had a lot of repurchases. Where is it? Okay, there it is. Common shares outstanding. Holy hell, they've been buying back shares like crazy. They went from 87 million in 2018, now at 69. No dividends, so they're just throwing money right back at the shares. Okay, this one's interesting. Free cash flow, 1.2 billion expected for 2023 compared to enterprise value of 9.5 billion. So that's pretty nice. That's like what, 12, 13%, something like that, maybe 14. Let's take a look at their debt. Okay. Total debt 3.5 billion compared to estimated EBITDA of 1.9, which is going down next year. Okay. So this kind of looks like a cyclical. Maybe they're just being conservative with their estimates. Let's see. 8 estimates for revenue, 6 for EBITDA, just 1 for free cash flow. Okay. All right, so that's going to slow, but they had a massive year through COVID. I think I'm going to look at this one a bit further. And are they trading below book value? Let's see. Okay, they're trading above, but that's not everything, right? It's really high free cash flow yield. It kind of has the multiples of a value trap, but it doesn't mean it's a value trap, right? Because what if these estimates get revised downward, right? That can happen for any stock, of course, but when you have a stock looking like this, it had a really great year, still pretty strong year, 2022, they're expecting at least. And these estimates could always go down, but that's why I like checking the long-term operating margins specifically, because that says how consistent they've been. And we have some good consistency there, so this is kind of telling me, you know what, maybe management knows what they're doing. They had one bad year, 2019. I'm sure there's probably a decent explanation for that, right? And they came right back. So, just by looking at historical operating margins, I would say maybe it's not a value trap. Maybe they're looking all right. So, I think I'm gonna take a deeper dive into this one. Let's see if we can check a few boxes real quick, though. So debt to EBITDA, it's not bad. Current assets, current liabilities, 16.4 billion to 11 billion. Not bad. And that's been pretty consistent, so pretty liquid. I assume they have a lot of cash. Oh, no, it's all receivables. Okay. So they're not just hoarding cash. That's good to know. Okay, 3.5 billion debt. So they're putting that debt to work, it looks like. Can't hate them for that. Stock-based comp, 45 million. Oh, that's nothing compared to 36 billion. Man, so this company, 36 billion, how big are they? 6 billion market cap. And they make 36 billion in revenues? Is this USD? Yeah. What? So, enterprise value of 0.27, price of sales of 0.17. Just looking at price of sales, they're really undervalued. But I don't just look at that. Enterprise value to EBITDA. Okay, so we know that the business is going to slow, right? But let's see what they've been trading at. 4.5, I see a low for enterprise value to EBITDA. They didn't even trade that low through COVID. And now they're trading at 4.7. Their free cash flow yield is off the charts compared to the historical. This one's pretty interesting. I think I glanced at this one before and I was like, I'll keep looking, but I think I need to do a deeper dive on this one. Maybe we'll cover this next week on the stream next week. yeah, this is looking pretty interesting. So, and I think let's take another look at shares outstanding. 87.7 million in 2017, down to 64. Man, that's 23, almost, 23.5 million shares versus 87.7. So what is that? That's like, it's over 25% of the shares outstanding they've repurchased. That's crazy. And that's not just like a 1 year thing. That's been the case. This thing kind of looks like a Hewlett Packard, a stock that nobody wants to buy, even though they keep buying back shares and have a pretty nice dividend. Okay, so negative cash from operations the past year. Maybe it's not fair to look at mid-year. Yeah, this one, I think this one's definitely, I got to take a closer look. I am skeptical on any stock where the business is going to slow down. But let's see. Talon Company, they increased their holdings by 8,000%. Okay, so before it was 0.04% of their portfolio. Estimated average price paid $118. It's trading at $94.45. That's what the close was as of today. And they increased their position at 3.69%. So they're loading up on this stock, it looks like. That was a big buy. Quarter first own, first quarter. And then they increased that much during the second quarter. So yeah, this one could be very interesting. What was that dividend? Are they paying a dividend? Okay, no dividend, just buying back a ton of shares. Yeah, this company, and they're doing it the right way. You know, it's not just stock-based compensation. I mean, that 45 million, that's a lot, right? But still, just repurchasing almost $1 billion in share repurchases. Okay, so they did load up on debt to do that, it looks like. But I mean, if they can service their debt, interest expense, 128 million compared to 2.1 billion EBITDA. Yeah, no sweat. And debt was 3.5 billion. So less than 2 times debt to EBITDA. And then what was it going forward? 6 estimates, about 1.9. So yeah, it's still less than 2 times debt to EBITDA. That's not bad. That's doable. Even if EBITDA goes down a bit, you know, it goes 3 times, they can still service their debt. They can still repurchase shares. It's pretty interesting. So maybe small risk of being a value trap, but I don't know if Talon Company's loading up on them. I think it's a good reason to keep looking to do a deep dive in them. And I don't have any shame in taking cues from the big hedge funds. You know, they always know something that you don't. You know what I mean? So yeah, and I'm still gonna do research. Typically, I don't just buy a stock just because I see it pop up on, you know, Talon Company's portfolio or Stanley Druckenmiller, right? But that was pretty interesting. So I think Arrow, MHO, MI Homes, whatever they're called. I think those two. Look, this Foot Locker. Oh no, he got out. He's still in. Okay, still in. But the ones that are added to, I covered Stellantis a good deal in last week's video. PVH, talked about them a bit. Oh yeah, he did pick up shares. Okay, that's where I was thinking about PVH. Okay, so there's another bull case for PVH. I mean, I don't know if anybody cares about Talon Company. I like them. I think DFV liked them too. It's funny how DFV is a bigger name drop than Talon Company. But yeah, I don't know what percentage do they own? MHO, he owns over 2%. It's pretty it's a pretty big percentage ownership. So yeah, maybe I'll take a look at them. MT is interesting too. ArcelorMittal, they are steel manufacturing, which normally, just as with home building, I would be staying far away from. But I think MT's trading at like some kind of stupid price to book value. Let's see. Seller middle. I think they're based in Europe somewhere. But they're the second biggest steel manufacturing company, the biggest outside of China. Okay. Price to tangible book value of 0.36. Price to book value 0.33. That's crazy. And this is the second biggest steel manufacturing company in the world. And it's by far the third place. They're not even close. So 4.9 billion free cash flow expected next year versus enterprise value 25 billion. So that's 20%. 20% free cash flow yield. That's not bad. Obviously, if steel prices just drop, which they will if we have a recession, that's going to be looking a lot different. But yeah, the other steel companies, they're not trading at this low of a price to book value. I know that for sure. See, I don't know. Maybe it's dangerous to try to cast a falling knife on steel companies, but that's a pretty damn steep discount, you know? They do have a dividend, about 2.5%. Let's see if they're repurchasing shares. This will probably be the last stock I look at for today. Oh, I have to look at okay, let's see. Let's just do MT shares outstanding. Macro trends. All right. Okay, 5-year, I guess. Went from 1.23 billion back in September of 2020. Okay, so they took advantage of high steel prices. Good business through COVID, or coming out of COVID, rather. That's a pretty good decrease in shares. So, what is that? Like close to 30%? Or that's about 25%. Okay. Pretty good decrease in shares over the past 2 years. So it seems they're definitely focused on returning on shareholder returns. Wait, that says 0.93 billion, so 926 million shares. Outstanding is 847 million. So even more than that. Let's see. Is that what Yahoo Finance says? Statistics. Yeah, 847 million shares. Holy hell. Yeah, that's like 30% of their shares outstanding. That is outstanding. Book value per share, about $64. Jesus, look at that. Yeah, that's crazy. And I think they're in Luxembourg, if I remember correctly. Yeah, Luxembourg. Luxembourg City, Luxembourg. So, I mean, maybe because that's close to Russia, because it's in that area. They have some operations in Ukraine. I don't know. Why else does this trade at such a steep discount? Like, I guess we can compare real quick. So price to book value 0.33. What's Alcoa, for example? Alcoa, another steel manufacturer, 1.25. I know they're not making as much money. What about U.S. Steel? 0.47. So it's actually close. Let's look at their estimates. Oh, look at that. They're not even going to make positive free cash flow. Look at that. They got nothing compared to ArcelorMittal. Are they buying back shares at least? At least doing that. Oh, after a massive increase in 2020. Okay, look at this. All right. No wonder why they're trading at a steep discount. What else we got? CLF, Cleveland Cliffs. Let's look at price to book value. And maybe you look at, you can look at other things aside from price to book value, but I'm just trying to draw a quick comparison. 1.1 times. CMC, the metals company, right? Or Commercials Metals Company. I think TMC is another one. Let's see what they're trading at. 1.43 TMC. I don't remember if that's the new, like a relatively new company. Oh, okay, never mind. Oh, 3.45. Okay, there's something that's positive. Okay, so I think you get the idea. CF, is that another one? Or are they what I'm thinking about? Let's see. Oh, that's chemicals. Never mind. So yeah, at least just looking at price to book value, they look to be trading at a steep value. They have decent free cash flow expected next year. So maybe there's something I'm missing. You know, just looking at financials, everything looks fine. Financials, the business is really going to slow down, and they'll probably be hurting if steel prices tank. Right? If we have a bad recession, steel prices go down. But that's okay, because if that does happen, I know that the second biggest steel manufacturer in the world, these guys are not going anywhere. So if this price tanks because of a bad recession, I'm probably going to load up on shares and consider a long-term hold, because steel would be okay in the long term. I know it's been really volatile, but it'll actually work well in a sort of hybrid renewable energy play, because solar panels, wind turbines, electric vehicles, you're going to need steel for all that. And I don't want to get too sensational here. I'm not going to say like, oh, it's just going to go up, right? Because it's EVs, because clean energy, but it's going to be needed. So I think the fact that it's the second biggest steel manufacturer in the world, the fact that we will need steel going forward, right? I mean, you could be concerned about steel demand in a recession, but if that does happen and the stock price crashes, you know there's going to be massive demand for steel prices going ahead, you know, over the next 5-10 years, right? So this could be a very good play if the market crashes. So I'm going to be looking at them, maybe at dollar cost average into them. They are a very low price right now. I just typically don't like buying stocks when I know they're going to drop this much, right? Or revenue, that is. 16 estimates saying it's going to drop 18% through next year. So it's not exactly rosy, right? Free cash flow, 8 estimates, 36% drop. So yeah, this could very, very well be a value trap. But I mean, even if the stock price gets cut in half, they're still trading at a better value than all those other steel companies. So it's a little crazy. Maybe there's some outlier risk, you know, because of their location, Eastern Europe. I don't know. I'm going to have to look more into this, but this does look like a very interesting play. Talent companies loading up on them. So maybe I'll do a bit of a deeper dive, or at least a decent update on them. Yeah, Talent Company has 2.8% of the portfolio in MT. So yeah, they got a dividend. This company looks pretty interesting. And again, normally I wouldn't be looking at steel companies right now. Like, I normally would not be touching them, but this can make for a potential, I don't know, like a good dollar cost average play. Maybe the markets fall. Maybe it becomes a multi-bagger, you know, over the course of a year or two, right? Let's see, COVID, it dropped to under $7 a share. And then 1 year later, yeah, as a multi-bagger. Made over 200% return 1 year later. So that's not bad. Then just kept going, yeah. High 37. I mean, who sells exactly at the highs? But still, that's some crazy movement. So I'm going to keep an eye on this one. Maybe I'll probably give an update next week. Hell, if prices keep dropping at this rate, I guess they didn't drop today, right? The markets are down, but this was up. But yeah, maybe I'll give an update on this one. Next week, I'll probably talk about MHO. What was the other one? Arrow. Maybe an update on PVH. So yeah, maybe do a bit of a follow-up. This week was kind of screening for plays. Just to give, I guess, like a live example of how I screen for plays. So insider transactions. PVH was on there for insider transactions, and they're being bought by talent companies. So that's an interesting one. So I see a lot of potential risky plays, but you know, sometimes that's where the most money is made, right? Or I think most of the time, right? So either way, if I don't like the price now, I think these companies are at least worth putting on the watch list and just waiting to snatch up some shares, if there's a big price drop. So yeah, I'm putting them on my watch list. That's MHO, ARW, PVH, MT, and then Spock. Spock is another weird one. SPOK, but that one I don't even know, man. I just saw a 17.4% dividend yield, and then a lot of insider buying. Who knows, right? I'll pick up a few shares, very small position. Let's see what happens, right? So yeah, I'll give a little update on those next for the next stream. But yeah, I guess that said, thanks for joining. If you have any questions on any of those stocks or any comments, maybe you know something I don't, go ahead and leave them in the comments. So yeah, that's it. Thanks again, guys, and I'll see you on the next